What is going on, my friends, and welcome back to another video on the channel. Well, I know the background looks really weird. Don't mind that. We're going through a full office renovation right now, so changes will be made and you will see that very soon. But today we are going over Polygon Matic, as this price does seem to be in a situation in which it may make the move that we have been talking about for over 6 months now. So with that said, let's not waste any more time at all, and let's get straight into today's video. Now, looking at Polygon Matic, we can see that we have been tracking this consolidationary move, or this kind of, sideways triangle for the last 6 months, right? Ever since August of last year, we've been stuck within it, putting in these highs and these lows and these highs and these lows. We had this move here, of course, but with the FTX crash, we got pulled right back into this thing, and it has been full-blown consolidation. Now, this is a big difference compared to the rest of the market. You look at something like Bitcoin, that's been pretty consistently going down. You look at something like Ethereum, that's pretty consistently going down. But then you look at Matic, and Matic has been pretty sideways. And so because of that, we have been expecting and anticipating that a move out of this was going to happen relatively soon. Now, generally speaking, whenever we see a triangle of this nature, a breakout of that triangle happens between 60 to 70% completion of the triangle. What that means is that if you measure from this high, right, when we first really started this triangle, to the apex, the meeting point, that is the distance. That is 100%. What you're going to do is take 60 to 70% of that, which in this example is about March 1st. So let's get this marked in. There we go. And then we're going to be looking at about January 29th. There we go. Right there. That's cool. So this is the 60 to 70% range. And so what you can see is that the range in which we will usually break out in is approaching very, very fast, especially while we are getting a move of this nature. Now, the reason I titled this video, "This Might Be Matic's Last Chance," is because realistically, if we start to get a pullback here, there then becomes the point in time in which we must say, okay, well, if we start going towards the downside, that move out and the breakout to the downside is becoming much more likely. Now, obviously, there is an opportunity for us to, come here, come back down, bounce, not really care about that 60 to 70 zone, and then continue upwards. That is very possible, but I am talking about general commonalities, and the commonality here is that we break out between this 60 to 70% range. So what that means for me is that we are going to need to see Matic break above this descending level of resistance within the next about a week or two, or else we are going to be in a situation in which we very likely will come back to retest the downside and maybe even break to the downside. Now, something that does back that up is the fact that we are looking at some possible head and shoulders formation here, in which you can see we have put in these local highs. We came in to put the higher high. We came back down, held the general level of support, and then are trying to put in local highs in the same little range. And so when you do that, it makes something like a left shoulder, a head, and then a right shoulder. And so, of course, when you're in a situation in which you might be breaking to the downside if we don't break out here, the 60 to 70 range is approaching within the next 2 weeks, and there's a possible bearish formation on the horizon. Well, it tells us we need to be prepared for that. So what I want to do today is prepare you for either outcome here so nothing can catch you off guard. Remember, guys, my goal on this channel here is to not be right, it's to be prepared. So let me prepare you. So what I'm looking for at this point is a breakout of this descending level of resistance. If we break this descending level of resistance, or just simply the top side of this this triangle here, that is going to be step number one and sign number one that Matic is kind of out of the clear from seeing a huge capitulation to the downside. If we're capable of breaking currently to about 95 cents or so, that is step number one. Now, personally speaking, that is not enough for me, and the reason being is because that then puts us right under about $1. Now, obviously, $1 is a super strong psychological level. Everyone's like, oh, it's at $1. This crypto's at $1. It fell below $1, etc. And so because of that, I would personally just wait for it to break $1 before I felt really confirmed on a bullish perspective. You can see back here that around $1, we constantly get rejected. A little bit below it, a little bit above it, a little bit below it, a little bit below it. You can see here we failed it, and that's when we capitulated. So obviously, or even back here, we can see multiple examples in which $1 has served as extremely important. And so because of that, for me, what does this say? It says that we need to make sure we're capable of breaking it, because what you don't want to see is another fake out in which we come all the way out of this thing, we hit $1, we get rejected, the bears step in like they've done multiple times in the past, like back here, and then next thing you know, we get a pullback back within this triangle. I don't believe we're going to see strong growth until we're capable of displaying that we're capable of breaking and holding a dollar. And at that point, we could see something to the upside quite substantial. Now, I don't think it would look like that. I think obviously it would maybe look like something like this and then like that and like that. And so personally speaking, if we break out of this triangle, that is the first sign that growth is coming. But I really would be looking for that breaking and holding above a dollar to say, okay, Matic is ready to go again. Now, generally speaking, I wouldn't even consider this as a possibility after a move of this nature. You know, when you have a sideways structure such as this with a fake out to the top side, generally that means a breakout to the bottom side is going to happen. When you break resistance and then fail to hold it and go back under it, you will usually break back down to the downside. But one thing we have to consider is that you have to factor in environmental things. And what happened here was that this wasn't just a normal fake out. This was a breakout that looked like a continuation of a possible 5 wave of this nature, right? 1, 2, maybe 3, maybe 4, maybe 5, something like that. But we ended up seeing the FTX crash kind of slow down that whole move and return us back into the sideways movement. So this really didn't have anything to do with Matic. And so I believe that although this is a fake out and it is generally considered bearish in, technical analysis, there is the potential for that to not weigh as much of a factor and us still get another breakout to the downside, especially as Matic announces things like the MasterCard partnership from just 5 days ago. And so overall, it does seem as if the possibility of a breakout to the top side is there, and we need to be prepared for it to say that we should at least wait for a dollar, in my opinion, before getting too excited. Now, if you look at something like the weekly RSIs, the weekly MACDs, they are pointing in a bullish direction. You can see this weekly RSI is still moving quite well. We're only sitting right around this 50 level. There is a lot of room to the upside here. You look at the weekly MACD, we just got a bounce off of this possible bear cross, which is fantastic. It seemed as if we were going to get a weekly bearish cross. That didn't happen at this point in time, and we could possibly be getting a bounce back to continuation to the top side here, which is always a good sign to show that some growth could be following soon. And so because of that, I am paying very, very, very close attention to what is happening here on the price, and this could be, again, our last chance to see this bullish movement actually go through. Now, what happens if we start to get rejected? Remember, the goal is to be prepared. What happens if we start to get rejected? Well, obviously, considering the fact that we are entering into our 60 to 70 range, we have to understand that there is we're running the risk of seeing a breakout to the downside. If we do start to see something of this nature in which we pull back, and we do that, yeah, that's still very likely. But at what point would I be more concerned? I personally wouldn't be concerned until we lose 75 cents. The reason I'm looking at 75 cents as such an important level is because of just what the history says. Historically speaking, every time we've come back down towards this 75 level and we've closed above it and we've not really had a problem except for right here, you can see that we've held it and we've held it and we've held it and we've held it. Generally speaking, the 75 cent level holds up quite well and then allows us to move back towards the top side. And so even if we are in a situation in which this happens, if we hold that 75 level, we could just see massive continuation and head on out of this thing. But if we do see 75 lost, that could enact this head and shoulders that we've been talking about, and that does put us in a situation where we are now looking at a possible 20 to 30% correction back to the downside. In this situation and in this example, if we were to lose 75 cents, I think that does put us in line to start to see a move back towards our Fibonacci's to the downside. If you're going to draw in your Fibonacci's, what you're going to do is get this fib retracement. You're going to go from your June 18th low all the way up to your November high, and you are going to look at it from a perspective of this golden pocket. The 618 zone is going to be what needs to hold. And if we lose 75 cents, likelihood is we're coming right back down into the zone, and this is when we need to hold some support. Now, the bottom of this zone is at 51 cents, and that's a pretty substantial fall from where we are now. That's about a 40% correction to the downside, and that's the reason why I'm looking at 75 so closely. Overall, I do believe this 618 to 786 box would hold. I think we would find some support in this golden zone, really just because Matic doesn't necessarily have a reason to need to set a low. I don't think we're going to come back down lower than where we were. I think the bottom is in for Matic, truly. And so overall, with all of the new partnerships they're coming out with and the developmental chain and the amount of upgrades and updates and hard forks they're doing, realistically, there is so much room of opportunity here, and it is more valuable where we are now than where it was just a couple months ago. And because of that, I don't think we're going to go back down here, so I do believe that this level would hold. And so with that said, if we do lose 75 cents, I'm going to be concerned because there is a likely 20-30% correction to the downside as we come to retest back in here. But overall, I do believe in the macro sense, this thing is only just getting started and that it would hold and that we would start to be able to see some growth towards the top side over the next rest of the year and possibly going even into next year. And so with that said, one way or another, I am more and more bullish on Matic every day. Their partnerships, as I mentioned, the MasterCard partnership with the Web3 incubator, all of those things are just building up the value of the ecosystem. And I do believe as they continue to do that, the wall and the window of opportunity just simply gets bigger and bigger. And so even if we do capitulate and have to come back down here, or even if we do break out to the top side up here, I will be looking to buy, I will be looking to accumulate, and I will be keeping you updated as it all does play out. So with that said, that's going to be about it for today's video. Of course, I hope you guys did enjoy. If you did, you can always let me know simply by smashing that like button and subscribing to the channel if you are new, and I will see you all next time. Peace.